Welcome, Michael from Joseph Palmer and Sons, Marcus from RisingTide. Thanks for being here, gentlemen. Today we are getting right out of our comfort zone. Aged care is not our space. We are not involved in it, but we thought today we would get someone who has an incredible amount of knowledge in that space. And the big driver for us is that we are starting to see more and more of our clients talk about inheritances, and therefore aged care and planning for their parents is becoming a lot more front and center.
We see those headlines. We listen to the newspaper. We read the newspaper articles. It's certainly a consistent theme of inheritance coming across our desk with our clients, and we can only surmise that to mean one thing: that we're all getting a little bit older in life, and that is what has led us here today to talk to you, Michael.
As mentioned, we are extremely confident in the space of lending, life insurance, goal setting, holistic financial planning, but aged care, retirement, anything post-retirement isn't really in our wheelhouse. To be really honest, we have no idea what's going on.
So, Michael, we thought a good place to start would be just, what got you into the industry as a backstory.
Yeah, absolutely. So my dad started this business. He originally is an investment manager by trade. He's got a legal background and a finance background. He's been doing that for about 20 years. About 10 years ago, he had to put his late mother into aged care, and he's relatively qualified to understand this space, and he couldn't understand anything that was happening throughout the process. On top of that, obviously incredibly stressful and emotional. She'd had a fall, she was in hospital, and he started looking around for someone to help him, and all he could find were people trying to sell him a life cover, a death cover, an annuity, a product, basically. And he said, look, I don't want a product, I want a service. I want someone to hold my hand and guide me through this process. Couldn't really find anyone, which is why he started that service about 10 years ago. He sort of run the two businesses, his investment management business and this aged care advice business at the same time. And about 2 years ago, I was looking for a change of career, and I've joined him to grow out the aged care side of things.
Awesome. So in it for the right reasons.
Yeah, well, we've been through the experience, which I think a lot of people really appreciate. And a big part of our role is the empathy and the understanding of knowing how stressful and emotional this time is. And we can guide you through that process with the experience of having done it ourselves. So, yeah, I think people really appreciate that, and it's part of why people like our service.
Yeah, great. So with that, let's jump into some questions, Michael. We asked our client base for some questions to put to you. We've got about 11 or 12 of those to run through. So let's start from the top. So Michael, what are the 3 things you would do today if you or your parents were starting to think about aged care in the next few years?
It's a great question. I think the main overarching theme is get a plan in place now. So get a plan in place now while your parents are still well, when you start to see the signs that they might be heading downhill, so you're not having to do it under duress and with 3 days notice, and they're in a hospital bed and they've got to leave. And when I say get a plan in place, probably if I could outline 3 things, it would be start to understand the different levels of care. So there's home care, there's retirement living, there's residential aged care. There's a whole spectrum here, and there's a difference between each of those. So you want to have a look at which one is right for mum and dad. The second would be to start actually having a look at a few facilities. So there's a bunch of aged care facilities in the area. They all have different clinical requirements, different costs. So you want to do a tour of those and understand what your options are. And the third, which a lot of people don't do, is start to understand mum and dad's financial circumstances as well, which is where you guys obviously would come in there. It's tough when you're having to do that while they're in hospital or under that pressure. You want to figure that out ahead of time. And I would say, just as an overarching theme there, this isn't a DIY exercise. You need to get professional advice, because there's a whole range of pitfalls and different areas where you can make mistakes. So that's where our service comes in, that you want to have professional advice. The last point just on that is often the responsibility falls on the children. It's not so much the older people that are making these decisions, because they're the ones that are unwell. It's that sandwich generation where you've got kids at school, you're trying to run a business, and it's all happening very quickly, very stressful. So you want to get a plan in place ahead of time to save you really going through that process.
I completely agree when you talk about starting to understand your parents' finances, but we also know that money is something not a lot of people are really comfortable with.
Correct.
The flow on of that is money provides a really big impetus or impact on aged care. What are some of the payments and fees required to gain access? And what options do our clients and their parents have when it comes to these fees and payments?
Yeah, so when you do start to tour the facilities, they'll throw a bunch of figures at you that are quite intimidating. We've created sort of a breakdown of a simple way to explain the different costs for aged care. So broadly, it breaks down into two areas. The first is what do you pay for the right to enter the facility, and it's known as a RAD, R-A-D. For all intents and purposes, that is a bond. It's the government, so they changed it to a confusing acronym, but you pay a bond to enter the facility. And you can pay that a variety of different ways, either as a lump sum or via interest payments. Then after that, you're going to have a monthly bill that's going to have 4 line items on it. Just quickly, they're called a daily care fee, an extra services fee, a daily accommodation payment, and a Centrelink means tested fee. We can go into what they all mean at another time, but those are the different fees you pay. How you pay the entry fee, so whether it's a bond or interest, will impact your monthly costs as well. So what our service does is outline the various options that we have for you. We'll never make a decision for you. That's not our choice. We show you the implications of each of the different scenarios that you can go for, and so you can make an informed decision as a family.
So just to simplify that, you've got a whole lot of information that you've got to get together.
Yep.
You guys will help with your experience on the strategy,
Yep.
but also help run the numbers and give people a bit of an understanding for them and their kids and their estate what the impact on a day-to-day basis is.
Correct.
And I'm sure we'll go into a bit more later on, but things like the pension and savings and principal
Exactly
place of
right.
residence.
So as you said, everyone's finances are different. The facility you choose to is going to have different costs. So we look at all those specifics and show you the different options you have.
Great.
And Michael, are any of those fees or payments refundable when the individual passes away?
Yeah, so in residential aged care, that entry cost, which can range from sort of 500,000 to almost 2 million, depending on the facility you're looking at, if you pay it as a lump sum bond, it's entirely refundable when the person leaves the facility. Alternatively, if you don't have the money to pay that lump sum, you can pay interest payments, and they're not refundable. So those are sort of two of the options that you have.
Got it.
You mentioned earlier that there is a spectrum of care types and places. Are you able to give us a really brief overview of a retirement village versus aged care?
Yeah, 100%. There is a massive difference between a retirement village and a residential aged care facility, which is the full title. A retirement village is a lifestyle choice moving into there. You want to do it when you're a bit younger. You can be there for 5-10 years and actually look after yourself and live independently. You have to be able to live independently in a retirement village. They'll actually kick you out if you get to a point where you can no longer look after yourself. Whereas aged care, residential aged care, there's 24/7 nursing on site and it's a clinical choice. So you move into there when you need permanent care. The other major difference when you're getting ready to move into aged care versus retirement village, aged care is very complex financially. So you want to have a financial planner to guide you through that process, whereas a retirement village is complex legally. So we would refer you on to a lawyer to help you with that.
Great.
What about the payments required to enter and remain in a retirement village, Michael?
Yeah. So for aged care, if you put down a lump sum bond, you get that entire amount back when you leave. It's fully refundable. Retirement villages are different. So each facility, each retirement village is actually governed differently. Aged care is federal legislation. Everyone in Australia is governed the same. Retirement villages are state-based. And with the retirement village, you have 3 types of costs. You've got an entry cost, you've then got ongoing monthly costs, and you also have an exit cost, which is the main difference. So if you pay for a unit in a retirement village, you most likely won't get that full amount back. They'll take off a percentage of that amount each year that you're there, which is not the case for aged care. Aged care, you do get the full amount back. So it's called a deferred management model. It's quite complex. It's not our area of expertise, but we can refer you on to people that can help.
Mate, let's look at a case study. I'm thinking about someone looking at aged care, not a retirement village. Single, retired person, maybe a widow, receiving a full pension, but still living in their own primary place of residence with no debt. They've paid it off.
Yeah.
What is the typical process to fund their entry into aged care?
It's a really good question, and unfortunately it's not a straightforward answer because, as you know, with financial planning, every case is different. Firstly, with the financials, what they have outside the home, and then also looking at the cost of the aged care facility. Often what people think is the answer is to sell the home, and it's not always the case. The main reason for that is the home is exempt for the purpose of the pension for 2 years. So when you move into care, the government says your home is still your principal home and you can keep your pension. From year 3 onwards, it becomes an investment property and you may actually lose your pension. There's also different fees and charges where the home is capped at a value of about $200,000. So as an example, if someone had a home of $2 million and they sold that home, you're turning what was only a $200,000 asset into now a full $2 million asset. So it's not a straightforward answer, but selling the home is one of the options we look at. We also then look at keeping the home, and it's very interesting. For every family we speak to that wants to keep the home for the future generations, there's another family that says it's too much hassle, I want to get rid of it. So taking into account what the family's goals are important to that as well.
We speak a lot about goals, and I think the major difference in our world is that we're often talking about for our kids. Fast forward another 30 or 40 years, we'll still be thinking about our kids. They're just going to be older. So I don't think much changes there.
Mm-hmm.
Yeah, absolutely. And I think that the key thing that hopefully people listening to this are understanding is it's really complex and you do need specialised advice. Otherwise, you can make really costly mistakes.
Another common question that was asked is, what about when there's a couple and one member needs to move into an aged care facility? What does it mean for the family home and pension, and how would you typically manage that?
It's a really good question, and it does have a specific answer. When there's a couple and one member of care, so obviously no two people age at the same rate. You're obviously going to get either mum or dad is probably going to progress quicker. When one member of a couple needs care and they move in, there's impacts for both the pension and the fees. In terms of the fees, the member of the couple that's living at home is considered protected, and therefore the value of the home does not count for the couple. Basically, the point of that is the government says, if you've got one member moving in, we're not going to force you to sell the home and leave the other member homeless. So there are rules around that to protect couples in that regard. The other is when a couple moves into care, they go from being eligible for a couple's pension to 2 singles pensions, which is actually greater. Mm-hmm. So you can get more money coming in from the government when a couple moves into care and they become what's called a couple separated by illness.
Really interesting stuff, and it just shows that every circumstance is different, and I assume everyone's health journey is a bit different. Yeah, it's really interesting. There is so much disparity in people's journeys, but I'd love to know, what are the 3 most common mistakes you see Aussies make in this space?
Yeah, 100%. There are some regular pitfalls that we try and help people with. The number one is moving into a retirement village when you should be looking at aged care. So retirement villages, if you become to a place where you're unwell and you can't look after yourself, they can actually kick you out and you can lose a lot of money in the process. So knowing which is right for you between retirement villages and aged care is number one. Number 2, which is very generous of children, is kids paying the fees on behalf of their parents. That sounds like a great idea, and often it can be, but often they don't realise that if you pay the RAD, that lump sum bond, on behalf of your parents, it'll actually count as an asset for your parents, which can increase their fees artificially. And the money that comes back legally must go back to the estate. So if you've got one child that put the money in, it'll get split up between the estate unless they get sort of a loan agreement put in place. And then number 3, I would say, is probably selling the home without realising the impact it's going to have both on the pension and the various different fees of aged care. So selling the home may be the right answer, but people don't realise that it's going to change all the different costs as well. So you've got to really look at the specific circumstances to know if that's what you should be doing.
We would certainly say with that, don't take advice from someone at the backyard barbecue.
100%.
This is the type of thing where you would hear people say, oh, we did this or we did that, but everyone's circumstances are different.
It's such a great point. It's one of the frustrating parts of the job is people come to us and say, oh, we know what we're doing because X, Y, and Z did this. And we have to say your circumstances are entirely different. So what they did is not going to be applicable for you.
So we're hearing get early advice, but also get the right advice.
Yeah, correct.
Before making a decision.
Absolutely.
Michael, what's the one thing you wish clients did before they came to see you? We know a lot of people come to see you saying, hey, my mum or my dad's had a fall. Mm-hmm. We need help yesterday.
Yes, correct. And it's what happened in my dad's case, which is why we started this business. He had 3 days to make a decision and it was all a whirlwind. So the answer to that question is get a plan in place early. Mm-hmm. Come see us when you start to see the signs of someone going downhill. The best clients we get are the ones that say, we're thinking this is happening 6 to 12 months down the track. we can have a really good conversation with them because they've got a clear head and they know what they're looking at. And then when it happens quickly, and they have a plan in place ready to go when it's all sort of going down, rather than having to make all these decisions on top of looking after mum and dad's health in a really stressful and emotional state. So get a plan in place early would be the one thing.
Just so we're clear, though, it's not when a few wrinkles or a few greys pop up, is it?
So I shouldn't be worried about it yet.
Nah, you guys are all right.
Just. Mate, are there any myths that you would like to debunk that might help our clients, prospective clients and their parents?
Yeah, definitely. There's a few key ones. I think the first is Australia is a fantastic country in that no one is denied an aged care bed. So often people come to us and say, we can't afford care because we don't have enough, and it's just not the case. There are all these rules and regulations in place to make aged care affordable for every Australian. So there's definitely a way that you can get a bed, even if you're just a pensioner and you don't have a home or anything like that. The second would be that you hear a lot of horror stories about sort of the world of aged care. Generally, they're not about residential aged care or nursing homes. They're some of the independent living units or assisted livings. The residential aged care, which is the space we play in, is very well run. It's well regulated. All the facilities are audited regularly and the level of care is very, very high. And then the third myth, which is something that we definitely see for people of the older generation, is that aged care facilities are decrepit, run-down, hospital-like places. I've toured some of these facilities. They are like 5-star resorts. They've got chandeliers in the lobby. They've got a pool, a gym, a library, a sauna. Some of these places I would happily move into. So if you take mum and dad on a tour and they actually get to see, oh, this isn't what I thought it was going to be, that's really helpful into getting them on side to actually starting this journey.
Michael, when is the right time to start thinking but also taking action? When should people be reaching out to a financial planner like yourself?
Yeah, earlier than you think is probably the answer. Not when mum and dad are in hospital. When you start to see the signs that they're heading downhill. One of the other things that we haven't touched on is there's a whole range of home care available to try and keep mum and dad at home as long as possible. So that's really the start of this journey. So when you see that they're needing a bit of support, come speak to us. We'll help you get home care. We'll then guide you with a plan in place for when the time is right for aged care. Because the reality is when it happens really quickly, and you want to have a plan in place for when things start going downhill, so that you're not making these decisions in a stressful and emotional state.
Wonderful. Mate, really appreciate your time today. It's absolutely reiterated to me that the conversations that we're having with our clients about their family tree are so important no matter what stage of life you're at. Yep. If you've never spoken to your parents or to your siblings about your parents, about their financial circumstances, it's just the right time to do it. You know, for me, my dad's a widow, and we know he's in okay financial nick. Marcus is his financial planner, but even for me, starting to think more about dad's future, because I know that making decisions under duress is not where I want to be. Yeah. We will make sure off the back of this that everyone's got access to your FAQs. Yeah. There's some really interesting stuff in there, if that's what you're into. Yeah, but also LinkedIn connections. But if anyone has any questions, reach out to us. Speak to your advisor at Rising Tide, Beck, SJ or Marcus, and we'll connect them.
Beautiful. Thank you very much for having me, guys.
Thank you, Michael.